Well, good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. Certainly, the trend in world markets would seem to be under a little bit of pressure. I'm quite sure many of the bond analysts on Core Finance have been speaking about inflationary pressures. So I'll start off with our first chart of the VectorVest composite of the UK. And the trend on the VectorVest composite in the UK, the longer term trend is still up, and that's reflected by those red and green triangles that I've got on our chart. But the short term trend turned down. So we have the short term trend is down. Our underlying trend is up, and at VectorVest, we recommend it to our subscribers to not to be buying shares at this time, to watching the shares that you've got, watching your stop losses very carefully indeed. In the US, the situation is much more complicated, and the markets, in fact, finding resistance, as I'll show you in a second. The S&P coming up against that big 4,000 number. So certainly in the US, this long-term trend that we've had since last March is under pressure. Now, again, in the US, the short-term trend of the market is been down for the last few days. The medium-term trend is down. Longer-term trend still up. But what I've added to this chart, folks, which is the green line study under the price, is the proprietary VectorVest buy-sell ratio. And this is worrying, to say the least, because as the VectorVest composite of the US went up and made a double top over the last day or two, well, week or two, you can see that the buy-sell ratio couldn't follow and made a falling top. Now, that's called bearish normal divergence. And that divergence on the breadth of the market, the buy-sell ratio, at VectorVest, we refer to that as the canary, because it gives a leading indication of change. So if we were to break down, folks, I think that needs to be taken very seriously indeed. So I think that the NASDAQ last night closed under its 50-day moving average, as the NASDAQ, the weakest of all three indices, and certainly tech counters got clobbered yesterday afternoon. So that will be reflected across the rest of the market relatively quickly. This up trend that we've had since last March under significant pressure, and you need to be very careful, in my humble opinion, with open profits. That's the S&P itself, and the S&P still upwards. I put two moving averages that I put on every chart, 21 and 55, and I think that yesterday's very strong sell-off into the close, be surprised if there wasn't more downside, even under the most positive circumstances. And Ellioticians watching will probably be concluding that we've got a wave C, a little wave C down, and the next support level, I think that even under the most positive circumstances, will be about 38.25. I think 38.25 is a very important level. If that level holds, then the bulls can wipe the sweat off their brow. I don't think the bulls can wipe the sweat off their brow until the market closes, the S&P that is, closes above 39.40 again. So, ladies and gentlemen, if you see the S&P closing above 39.40, then the uptrend would seem to be intact. I think a close below 38.25, and you need to be exceptionally careful with open profits. I remain always optimistic, far too optimistic at times, and I've located three stocks in the UK that I really like the look of. The first one is the GB Group. Now, I hold a position in the GB Group myself from the 24th of March last year. And it's done well for me. That's a 5-year chart, I think. Yeah, 5-year weekly chart. Down below the price is the earnings per share. You can see the earnings per share rising. on VectorVest, we rate the relative safety of this company as excellent. In other words, it's making money, as you can see, and all the financial ratios are getting better. It's pulled back to a previous old high, and it's exactly at support, and it's found a great deal of buying pressure over the last few days at that support level. If the general market should start to move up again and we move back in the UK to an up situation, short-term trend up, which it's not at the moment, the short-term trend at the moment is down, and the longer-term trend stays up, then GB Group looks like a bargain at these levels. So the next company is Liontrust Asset Management. I'm also a shareholder in this since the last 24th of March last year. Again, you can see the very strong growth in earnings per share over the last 5 years. I've added the green thick line, which is the VectorVest valuation. And this is saying that we believe this company is significantly undervalued. It's going sideways at the moment in that compression pattern. And if the general market should break up again, then I think this will move strongly. I haven't shown that volume that clearly, but on up days recently, volume has been rising, and that's always a strong indication of accumulation. So I like the look of Liontrust. Again, it's got a very safe track record of making money. And the last one is Games Workshop. Now, Games Workshop, again, I've been a shareholder in for a very long time. I think pretty much everybody at VectorVest has been a shareholder since about £13. It's pulled back to an exceptionally good level. And the other day, it sold off because they didn't pay out quite as much dividend as the market expected, but the forward advice was exceptionally good. So I believe that that's a low-risk opportunity to actually enter into Games Workshop. Always difficult buying on the lows. When it's time to buy, you won't want to. You're always scared that it's going to go lower. So mostly it's always easier to buy on highs, but the quick money and the easier money is made if you've got the strength to buy at the right place. You then can put your stop loss well out of the traffic so it doesn't get hit. And certainly as a trader, this is the right place to be adding, in my case, to Games Workshop. Now, a couple of weeks ago when I was on Core Finance, I talked about gold. And gold, as you know, hasn't really done much. The bullion price, I think, needs to close on a weekly close above 1850 odd. But this is the GDX, which is the VanEck Gold Miners, US exchange-traded fund of US-listed gold mining companies. That's a weekly chart. And the GDX has pulled back with the bullion market to old highs, which is also a 50% retracement. It's pulled back in a flag pattern, and what the guy who's made flag patterns his own, a chap called Thomas Polkowski, who's written a book called The Encyclopedia of Chart Patterns, he calls that a tight flag, a very high probability pattern. If we look down below the price, I've included a weekly MACD, moving average converging diverging, and for those of the technicians, it's just about to give a buy signal, and that buy signal will be preceded by a very strong reverse divergence, or what some technicians refer to as a slingshot. So I think that the GDX and the entire gold market is setting up. I would wait and keep your eye peeled on Friday's close on the bullion price above 1850. Then that's starting to look much more probable. Okay, so to summarize, the trend in the stock market since last March looking suspect. Keep your eye on the S&P. Keep your eye on that 38.25 level. Close below that. Just be very diligent with your stop losses. A close above 39.40, and we probably can wipe the sweat off our brow for a day or two. I hope you found that useful. If you want to try VectorVest, vectorvest.co.uk, a 30-day trial is £5.95. I do weekly webcasts where I talk about what we're doing and what I'm doing. And if you would like a complimentary invite to one of those, it's david.paul@vectorvest.com. david.paul@vectorvest.com. Thanks very much. Bye-bye.